Let's get into a live commented trade example. This is a trade where I managed to pocket $1,664. But beyond the financial result, what I really want to show you in this video is the reasoning that led me to take this trade and to walk you through, to share with you a little bit of the trading method that I follow when I take my positions. It's a three-step method, let's call it that. The first step is really about understanding the context of the market. The second one is about preparing a trading plan. And the third is about taking action by following a trading signal. We're going to come back to each of these three steps. So, first step, understanding the market context. Every week on New Trading, I write a newsletter that breaks down this market context a little bit. In this case, the context was the following. We had a market that had just absorbed the jobs numbers without even flinching, and that was getting ready, that was bracing itself to take in the inflation numbers the day after this session. And what was happening, what I was reading, is that we were actually just a few dozen points away from the all-time highs. So naturally, at these valuation levels, the margin for error is very thin, and we had a real risk of a rejection at the level, meaning a real risk of a correction at these levels. And when you analyze the previous session from a technical standpoint, that was something you could observe as well. You could really see the short sellers taking control. Right from the start of the session, we'd had this push to the upside, trying to rally up to the resistance at 50,609 points. But we just didn't have enough energy on the buy side, and the sellers took the upper hand. So really a clear change of control over the course of the previous session. The sellers then brought the market back down to the symbolic threshold of 50,000 points, right? The sellers took their profit, we were oversold, and then we bounced back. And once again, the sellers managed to take back control, this time around the daily pivot point, to push the market lower once more. And you can see that the buyers, unlike in the previous sessions, just didn't have enough energy to actually take back the trend that was in place. So that gives us two big warning signs about the strength of the uptrend. The first warning sign, the inability to reach the target up at 50,609 points, which is a major target, the all-time high. We stopped a few dozen points short despite all the enthusiasm in those first 15 minutes. And the second warning sign, despite the correction, we then failed to take back this key level, which was the daily pivot point. So, two pieces of information: a fundamental backdrop with investors who aren't all that calm and confident, and buyers who are running out of steam despite their attempts and despite the optimism at the start of the session. So all of this taken together gave me the following trading plan. Here's what I'd written down for you right here. The buyers losing control during yesterday's session is fairly concerning. The initial target wasn't reached, plus there was a failure to win back the daily pivot point during the session. So for this session, I'm going to be favoring short trades with my sights set on the buyer's stop losses, positioned below the support at 49,910 points. So that's what I'm keeping an eye on the daily. Now, how did I actually determine this target? So this, again, was once more just before the session. Basically, every single time I put myself in the head of the average buyer and the average seller to try and identify the trade that they want to place. So the average buyer, he wanted to buy around here, more or less, in order to aim for the target up at the monthly resistance. On the way up, the next target was this monthly resistance, and he had his stop losses positioned just below that level, below the monthly resistance one, which he imagined as a kind of protection level. And the average short seller, well, he was the exact opposite, meaning he was targeting this monthly resistance one, and he had his stop loss above the high point. Now, why is that interesting? Because as a result, since I was anticipating that the buyers were in a position of weakness, my objective every single time is to go and hunt the stop losses, to go and reach at the very least the price level where the stop losses of the struggling side are sitting. So in this particular case, with the buyers in a position of weakness, my target was to go and reach at the very least the 49,910 points. So that's it for the context and for the preparation work. And now you're going to see it in action, how it actually got executed during the session. So right from the start of the session, you can see we've got investors who are relatively optimistic and who are trying to rally up to the daily resistance one, but without any success. Despite leaning on this intermediate support over and over again, it's just not enough to have the energy to reach the buyer's first price target. So optimistic buyers, but ones who are really lacking strength. You can see that despite their offensive on the cumulative volume delta indicator, you can see we've got 4 or 5 candles where the buyers go on the attack, but they can't even manage to rally back up to the last intraday high, the one that had been reached just a few minutes earlier. So all of this, what does it tell me? Optimistic buyers, but ones who actually don't have enough strength. It tells me there's a big potential for a counter move, for a move to the downside, because the moment the sellers press a little bit on the accelerator, the buyers are going to be caught completely on the wrong foot. So from that moment on, I'm just waiting for my technical signal, which is a bearish reversal of the 7-period exponential moving average. And so as soon as we get the crossover, I enter at market with a stop loss order placed above the last high. With this kind of setup, I allow myself a maximum of 3 entry attempts. If the first one fails, that still leaves me 2 more. If by the 3rd attempt we still don't have a result, I'll pass on this trading plan and I'll wait for the next trading plan to come along. I don't want to dig my heels in. But here, you can see it works out nicely right from the first attempt. So I'm risking roughly $130, and you can see it moves in the right direction. In terms of targets, what I want to go and reach, as we saw on the trading plan, is the buyer's stop losses placed below the monthly resistance one. And so I set a price alert at that level. And you can see a bit later that the alert got triggered. From that point on, I'm paying close attention, ready to cut my position as soon as it crosses back up. So you can see the moving average crossing back up to the upside, and I take my profit right at that moment. That's the advantage of following an extremely clear technical signal and of having a well-defined trading plan. It's that you don't have all of that emotional second guessing. My profit now, should I try to hold on to it for longer? Here, I've genuinely got an extremely clear trading signal to follow. So there you go. I hope you enjoyed this trading example. Don't hesitate to ask me your questions down in the comments and to subscribe to the newsletter if you want to get the weekly trading plans over on newtrading.io. Thanks.